Everyone. My name is Mark Caesar. I'm the host of Financial Freedom Through Apartment Investing, a proud affiliate of the GOP Apartment Network of Apartment of Investors. And today we have Mrs. Beth Underhill, who is the founder of Lifestyle Equities Group, a real estate investment company providing opportunities to either active or passive investors in multifamily syndications or single family homes. Beth has had an extensive background in home renovations and construction with a passion for ensuring individuals and families have a safe, functional, and loving place to call home. Outside of that, Beth she's also working on several projects, including 3 hotel conversions in Ohio and several LP opportunities with the goal of providing not only much needed affordable housing, but to also assist in the community restoration of the areas. Beth is looking to impact the housing market by taking existing buildings, homes or apartment complexes, and breathing new life into them, especially in areas where new development is not an option. Now, Beth also she's been an entrepreneur for roughly 25 years and counting, mastering finance, marketing, and client relations needed to run small businesses. She has a very diverse passion for catering, Golf Chic Boutique, Bella Forza Fitness, Open Doors Ventures, and Outdoor Design Build. She has created numerous entities that have been on the cutting edge of forging new roads in the industry. Outside of business, Beth can be found enjoying time with her husband, daughter, and 5 dogs, playing golf, competing on the national, international level in powerlifting, of which she holds numerous state, national, and world records. Beth, that is a very illustrious resume, I must say.
I'm sorry. You asked for a bio. I didn't know if that was like too much. I'm like, well, here's what I've been sending out. So here you go. So
hey, yeah. I mean, it definitely stands out from the ones that I've seen. So it shows a lot. I definitely can. I was impressed with the powerlifting one. I was like, okay, that caught my attention. But welcome to the platform. I know we've spoken. I think sometimes last week for the first time, and I was really intrigued by your story, and I definitely wanted you to jump on here and share with the platform, your journey from redevelopment and flipping houses and how you are using those systems and skills to navigate into the multifamily space.
Sure. Yep. Well, thank you for having me, and thanks for everybody who's joining us this evening. I appreciate the fact that you're taking time out of your Monday evening away from family or whatever else you have going on to hear a little bit about who I am and what I've been doing. As Mark mentioned, I have been a serial entrepreneur for a very long period of time. I knew early on in my life that I did not want to necessarily work for anybody else. I know that doesn't sound isn't the nicest statement, but I just knew that being a small business owner or forging, my path and in various endeavors was the way that I wanted to go. So when I met my husband, that was enforced even more because he has just as much of a passion for, being a small business owner and forging a path as I do. So we created back in 1998 Outdoor Design Build, which is the business that has actually put a roof over our head, provided, put food on the table and provided us with a very comfortable lifestyle. And what we do is we build outdoor living spaces, which have become super hot, especially in during the pandemic. Of course, prior to that, we were definitely in demand for outdoor living spaces. But once COVID hit and people realized that they weren't going to be traveling as much and decided that they were going to put money into their home, outdoor living spaces our business just skyrocketed. We can't handle everything that comes at us, which is a good problem to actually be having. But what we essentially do is we create these really cool outdoor spaces that either may or may not have a covered roof, massive fireplaces with flat screen TVs. If there is a roof over top, then it's got maybe a heater or fans, whatever, so that you can use these areas all year round, outdoor kitchens that have refrigerators and grill stations and so forth. And essentially it's like taking an extension of your home and just putting it outside and being able to enjoy the outdoors, depending on time of year and so forth. Most people are able to use these, I would say, in Cincinnati, in the Cincinnati market, probably, unless it's snowing, people are outside. So it's been really cool. But in addition to that, I've had a catering business. I had an internet-based business where I sold women's golf apparel and accessories. And I also had a fitness studio for many years. Throughout all that, though, my husband and I have just kind of dabbled in real estate. We actually had considered buying a business called Help You Sell. And this was back in 2003. And it was a real estate business in which the business itself would help sellers actually sell their homes, put them on the market, and make sure that you could get on the MLS and so forth for a flat fee. And of course, that's very common nowadays, but back in 2003, that wasn't so common. So we had thought about investing in that. We ended up not investing in it. And then of course, the company went belly up. So I'm glad that we didn't invest in it. However, the house that we currently live in, we purchased this by some creative financing, did a land contract for several years, and then finally purchased it. Eventually we made our way into flipping homes. My husband sometimes, when he can't sleep at night because he has too many things on his mind, likes to flip through infomercials, and came across this advertisement for this event that was being held in Cincinnati. It was a one-day wonder, and it had to do with flipping houses. And this was back in 2018. So we decided to go to this event. He encouraged me to come. He's like, I think you'd be really good at this. And, maybe we could, start to flip some homes and bring our guys who mostly work outdoors, obviously, bring them inside maybe during the winter months like December and January. We flip a house and then go back to our usual business. So that was going to be our game plan. So we went to this one-day wonder, and of course, they convinced us that we needed to pay $9.99 and go to a 3-day event. And so that's exactly what we did. So we went to this 3-day event, and I fell in love with the business at that point. So much so that they said, hey, there's another level that you can go to, and it's a 5-day boot camp. Let's go out to Irving, California, and we'll walk you around properties in Irvine. And you'll get to see, how we flip homes, how we assess ARV, and how we assess rehabs and so forth. So we did pay some money to go do that. Luckily, we actually got a discount because we knew the spokesperson of this particular company. So we went out there for 5 days, and that's where we started meeting just a ton of people, people like ourselves who had a passion for transformation, people who wanted to make more money on their money. And we've met a variety of people who had various skills, and we ourselves as contractors thought, we could be the contractor. We just, want to find an investor to partner up with. And lo and behold, we found our first investor out there. And he happened to live in Northern Kentucky. So that was 30 minutes from where we lived. And so we thought, let's partner up. Let's figure out if we can do a deal together. So we came back home, and within 30 days, we had our first house under contract. And this was a house we had been eyeing. I had been eyeing, I should say. And at first the buyers, turned us down in our initial offer. And then they came back to us realizing that they just wanted to be done with the property. And typically, the best kind of properties are ones that if there's, a divorce, if there's a death, or if there's some sort of debt, like a bankruptcy or whatever the case may be, and they need to get out from underneath it. With this particular property, there actually was a death. The last living parent had passed away, and the mother, she had been living in this house, and the kids they didn't like each other. There was a lot of fighting going on apparently amongst the kids, and they just wanted to be done with the house. They wanted to settle the estate, and they wanted to move on. So after some back and forth, we finally secured this house. And we started on our first house. And shortly after that, we ended up with our second house. So we had 2 houses going on almost within 3 months after attending this flipping seminar event, whatever you want to call it. the biggest mistake that we ever made is that we ended up using the same contractor for both houses. So we started down this path with this particular contractor who we actually liked, had done some work for my husband's company, our outdoor design build company, and we thought we could trust him. We signed a contract with him and gave him a deposit, started immediately on the first house, started the demo and so forth. We all had walked both houses between ourselves, the investor, and of course the contractor. Everybody thought we were on the same page. However, we later found out that like a lot of contractors, he had been robbing Peter to pay Paul. So he was using some of our money to go finish off other things. And he was involved in a very large commercial project that he was really under the gun to complete, and was struggling to make it happen because he couldn't pay all of the subcontractors. And so we ended up being, we kind of felt all the repercussions of that. And so we, constantly were on him like, hey, when are we going to see you? When are you going to be showing back up, and so forth. And so lesson number one was learn that, you need to hold your contractor's feet to the fire as far as a timeline of completion, and make sure that that's completely spelled out in writing. And that's something that we didn't do. So that was lesson number one that we learned. Lesson number two, of course, was don't hire the same contractor for both houses, because obviously the first house was not being worked on. So therefore the second house was not being worked on. So we had two houses that had holding costs and so forth. And we were starting to go down the path of being somewhat disastrous for our first two houses. Lesson number three that I learned is that your investor has to be on the same page as you are. And that if whoever it is that you're partnering up with to do anything, if it's a multifamily property or if it's a flip house, you have to know who you're getting in bed with, and know what, kind of how they operate. Because early on, I saw that this contractor obviously was not going to, fit the bill, and we needed to get rid of him right away. However, our investor, who brought some of the gap funds to the table, he said, you know what, I really like this guy a lot. I think we need to give him a chance. And he's, I've talked to him on the phone. He's going through some stuff right now. And I thought to myself, you know what, excuses I get, but business is business. And, we can't let the emotions get in the way of business, because time is money. So of course, this contractor, realized that he could play on the emotions of the gap fund investor. And so every time there was an issue, he just kept going back to the gap fund investor. Well, after a long enough period of time had passed, the investor actually just, he was getting upset. He was like, his houses, and, both houses, I should say, there's no progress to them. And so finally we ended up having to fire the contractor, but the contractor did not take that very lightly. He decided that he was going to file liens on both of the properties. And he also started sending death threats to my husband. It was pretty crazy. So we had to get a restraining order against him. He was thrown in jail for a day because of these death threats and whatnot. So we learned a lot of lessons with that all. And of course, we had a bit of a legal battle that came along with that. Needless to say, our first two houses, although very successful from a selling standpoint, because they sold above asking price, there was too much time, too much money, too many other things that came in the way of having of allowing those to say that we had success with them. So we learned that lesson, and of course, that particular investor decided, you know what, I don't want to do any more flipping. But my husband and I still enjoyed it, and we ended up through some networking and so forth. We met another individual who we started hunting for some houses, and the three of us ended up doing, 1, 2, 3, 4, 5, 6 houses together over the last 3 years. Of course, we had, some challenges as well, but we learned, we brought our lessons to the table that we learned from the first two houses, and we fired contractors, sooner. We got rid of them. We had ironclad contracts, And we were actually able to benefit from all of the fruits of our labor. And again, we had some solid homes. I think 2 out of those 6 houses that I mentioned sold for above asking. And that was, we've been doing that. All of these houses that I tell you has been over the course of the last a little less than 3 years. But since then, we've actually branched out with some other investors, and we've streamlined just how we operate, what we do, who it is that we have work for us. We know who we can trust from a plumbing standpoint, from an electrical standpoint, from a drywall standpoint, from a painting standpoint. And we have those individuals, they're on speed dial with us. And now we know who to call, when we want to do something. And we've found, actually, just through marketing on social media, showing the before and afters and so forth, we've just attracted a lot of people who've come to us and said, hey, I want to learn how to flip houses, or can you come to my house and do X, Y, and Z to it, and so forth. I've actually thought about actually starting here locally in Cincinnati, almost my own like flipping educational company, where I tell whoever wants to flip a house, like, hey, I will go teach you the ropes, and you can pay me X number of dollars for me to mentor you through this process. I'll help you find the right house. I'll help you with the contractors and so forth. I'll help you map out a timeline, et cetera, everything that you need. And I'm just getting paid some flat fee to just basically mentor and guide them through the whole process. Only because I know now what to do, what not to do, and how to make it happen. So along the same lines, I, during this whole time, obviously building up some capital, and also a little bit of frustration, and realizing that, flipping a house can be like another job. And for my husband, especially, who manages, anywhere from 2 to 3 outdoor living spaces at a time. And these outdoor living spaces, when I talk about them, we have people spending upwards of, $150,000 to $250,000 just for an outdoor living space. So they're not small projects to actually be managing. So we thought, we're going to just be more selective about the jobs that we take on, the type of flip homes and so forth, and who we're actually going to work with. We like the type of investors who are silent, who want to just, hey, here's the money, go make it happen, provide me a nice return. We've paid as much as 20% to an investor. And I'm not talking about per annum, but 20%. So recently we flipped a house, and an investor, he actually, I think he put in $174,000, and he walked away with $32,000 on top of that 174. And that was over the course of, oh, hello? Am I still there?
Yes,
okay.
ma'am, you are.
Okay, I'm not sure what happened. Oh, safe drive mode. Okay, so he, and that was over the course of 5 months that he made the 30,000. So it's been really interesting, and I've learned, an awful lot. But throughout that whole process, I opted to start looking into multifamilies because I wanted to scale more. And I thought, you know what, I'm doing this on, I'm doing this with, one house at a time. There's got to be a way where I could scale and do this on a bigger level. We've managed budgets, to the tune of almost $300,000 with some of our properties that we flipped. So I thought, well, maybe there's something here. Maybe I can start to take what I've learned in the flipping business and actually translate that and put that into the multifamily space. So I started researching syndications, and actually attended a 3-day event that was all strictly about syndications, and super, very interesting. Met a lot of people, and saw where, my value, which is generally in acquisitions, from the flipping standpoint, I saw how I could actually translate and actually use that to help me in the multifamily space. And then I didn't really realize that, capital raising, although it is quite difficult, as I started to network with people and so forth, I was asked to help capital raise on a very large 446 unit deal in Texas. And the gentleman who asked me to help him, he said, "Look, he's like, you're just getting started in this space." He's like, "What if you just try your hand at capital raising? I'll give you a goal. Let's see what you can do with it." He goes, "Don't worry about it. If you don't meet the goal, I'll put in the rest." And I thought to myself, "Oh, this is a great opportunity for me. Why not?" And what I realized through capital raising is that it's very similar to the investor relations that I had to maintain with all of our flip properties, and that was me. I mean, I don't know why everybody always comes to me, but everybody, if the contractors were having an issue, they would come to me, and then I'd have to go to the investor and talk to the investor about it. And I realized that investor relations is something that I'm good at. I find that I feel like I'm a very genuine individual, and I think people can actually see that right away, almost immediately. So I'm not the type of person that's trying to pull the wool over someone's eyes. So the capital raising is something that I've fallen into. I can't really say I'm the greatest at it, not yet, but I'm definitely getting better. And what capital raising has allowed me to do, or forced me to do, I should say, is put myself out there more. A couple years ago, I was very anti-social media. I'm like, social media drives me crazy. And I think I was looking at social media from the wrong perspective, as opposed to using it as a marketing tool, which is what it really is when it's all said and done. And looking at it that way, I was looking at it more from the standpoint of, oh my gosh, this person just posted this and this person just posted that. And, I feel like I have to keep up with so much on it and so forth. And it was just almost very negative for me. But once I started viewing it differently, I started realizing the power of it. So I managed to get people interested from LinkedIn, and now people are connecting with me and asking me questions, which is great. I've started putting myself out there in some of the Facebook groups and so forth, and it's amazing when you put something out there and you tell people that you have deals and you're looking for LP money and so forth, how many people will flood your inbox all of a sudden and start asking you about the deals. So it's definitely been a ride. And again, we're still going to continue to flip. We just signed a contract on a property. It's $150,000 shell building here in Cincinnati that we're going to turn into a single family home, and the shell that was right next to it, somebody just purchased it for $650,000. So our margins are really good on this particular project, and our investor is very excited. And this particular investor is the same one that I actually managed to get invested in. He was my first investor that invested in an LP, as an LP for one of the capital raising projects. So I feel like I can, if I can do and create those relationships, even through single family homes and single family flipping, that can actually translate into other areas like the multifamily space as well. So that's kind of the long and short about me. Open to taking questions or feedback or anything else. So
that was a very very detailed journey. I can definitely relate in some ends as well, where I've been burnt by a contract. My partner and I, we've been burnt by a contractor as well. We're still, he definitely we were looking to do. That was my first flip. I threw my hat in the ring, and the contractor pretty much took our fund and disappeared. Yeah. So I understand, and that's one of the reasons why I pivoted over to multifamily. I don't really want to deal with contractors. It's a hassle. If I learn how to effectively manage them, I probably would consider it. But I think a lot of people definitely start off, whether it's wholesaling or flipping, as an avenue to pivot into larger deals. And of course, we see your success with what you've done, having done so many flips. And using that credibility to attract, other investors to, to carry them into like LP deals or apartment deals. So I appreciate you sharing that. Now, we do have a few questions, so but I do want to kick off the Q&A with one question. So what exactly, when it comes to flipping, like, is there a system that you put in place to, let's say, to find your success? Like, what type of systems that you put in place? I know there are so many components when it comes to flipping houses, but for you and your style of high-end finishes that you're looking to do, what type of systems that you have in place that help you become more successful and proficient in rehabbing houses?
From a system standpoint, I think number one, obviously weeding out the bad subcontractors. Honestly, becoming your own general contractor is really the way to go. Hiring, we were told from the very beginning, hire a GC, hire a GC. First of all, a GC is going to take so much off the top anyway, that it just cuts into what the potential profits can actually be. And I think when you can go find that base of individuals, and really if you can find 3 plumbers, 3 tile guys, 3 electricians, 3 drywallers, 3 painters, and so forth. A lot of people think, oh my gosh, that sounds like a lot of work, but really the people are out there, and the good ones are out there too. And I would much rather pay a little bit more money for some of the more well-known contractors, especially if I'm going to be general contracting it, because then I know, number one, I don't have that general contractor fee and he's not marking up, some of these guys. And number two, it's the reliability. And that's what I'm looking for, is just reliability out of my subs and so forth. So, so basically what we do is, we map this all out from start to finish. We say, okay, here's our timeline. Here's how we're going to complete this. And here's what we need to do week 1, week 2, week 3, week 4, week 5, and we map it out. And any deviation from that, we try and figure out how we can make up some of the time if we feel like we're going to be over, under, whatever the case may be. And we also communicate that with our investor. So weekly meetings, weekly updates, very similar to, in multifamily, when a syndication, for instance, is going to provide, the updates to the LP investors and so forth, providing that update to and encouraging actually the investor to come and, hey, walk the property, come see what we've done, come see the, how this is looking and so forth. So that's one way. The other thing too is just materials. I know my go-to colors for paint. I know my go-to materials for, where am I going to get my granite or quartz from? Who am I going to buy my cabinets from? What fixtures I'm going to use. I mean, I use a lot of the same fixtures, house after house after house after house, and it's easy. And also from a price point standpoint, we've done houses that have been in the less than $300,000 range. We've done houses that have been somewhere between, slightly above 300 all the way up to just shy of 600. And then we've done houses that are in that $600,000 to $800,000 range as far as ARVs are concerned. So what I use in my $800,000 home, I did not use in my, $300,000 home. And you really have to know, and understand that, sometimes, the difference between going to Florida Tile and buying the best looking tile that I'm going to pay maybe $4 a square foot for, that's going to go in my $800,000 home. But Floor & Decor or Home Depot or Lowe's, perfectly fine for the, $200,000, $300,000 home and so forth. So, it's just making sure that you, know and understand your price points and what you can and cannot spend. And also, catering to the market. If I want to get $650,000 from the shell home coming up, then I have to make sure that I put those sort of things, those kind of fixtures and finishes and so forth. And, that's one thing that I will start doing, right now. We're actually in this particular shell situation, we actually the sellers are allowing us to escrow the money so that we can start work on it immediately, which is like, hey, thank you very much. So, we'll map out what the kitchen is going to look like. And I usually do the design work for the kitchen and the bathrooms and, where I want things to go. And we'll spray paint it all out. And then I immediately start ordering all of my cabinets, because I know cabinets, of course, take a long time. And I'll do some mock-up designs. I'll go on Fiverr. I've got a gal that will do some mock-ups for us to kind of say, okay, here's our vision, here's what we want it to look like, and this is what we're going to shoot for, so that everybody's on the same page with it. But those more or less, are our systems. Putting a timeline together, I think, is of utmost, and then just starting to contact those subcontractors almost immediately, getting plans in their hands and so forth, so that they know to start, carving out time in their schedule for us, so that the moment that we need them, they're ready to go. So does that help?
Awesome. Yes, ma'am. That was I appreciate you answering that. I think Jonathan had his hand up first. I'm not sure.
No, it wasn't me. No.
Okay, I apologize. So Jeff, it was feel free to shoot your question, sir.
Yeah, sure. That good conversation, Beth. It's funny. I have a friend of mine who's a flipper in New York. He's done 400 houses, believe it or not, and
Wow.
Built a lot of the same infrastructure that you're talking about. Became a general contractor, controls his own trades, has a permitting expediting service. So interesting to see that you're doing a lot of the same, which is great. My question for you related to the capital raising is, when you raise capital for deals that are not your own, how do you stay involved with the deal after it is taken down and it's actually alive and running? What's your involvement thereafter?
Well, it's funny that you asked that, because the first deal that actually I was involved in capital raising just closed last Tuesday. So I'll find out how they're going to keep me involved. But no, I've actually been in touch with my contact there, and we have a call scheduled this coming week to go over, my involvement and what that looks like for me. So I can always circle back around and answer that question for you. But my plan is to make sure I am, part of the emails, the conversations, everything that goes on with the LP investors and so forth. And that's what, my request is to them as far as involvement. Because the individual who actually brought me on the first deal, I told him, I said, look, I want to learn. I want to understand what is it that you do, how you take down a deal, what happens after the fact and so forth. And he's like, well, get yourself a share of the GP and you'll be part of that. So.
Now,
help.
I'm sorry. Go ahead, Jeff.
No, that's pretty much what I was expecting you to say. And I think that's a big deal when you're an outside raiser, is to make sure that you have a proper role, proper definition around how you're going to stay involved and the value that you could bring. Clearly, you have a lot of building and construction background. So on the larger deals, there's always asset management, there's changes, there's fixes on the property, and that's where you can lend value. So I think that's where you should stay involved.
I agree. And my personal preference would actually be, and unfortunately, sometimes this doesn't happen because I came into this particular project a little bit on the late side. I would have loved to have been involved in just any of the, the design of colors and things that, if there were going to be color changes to the exterior, interior, and so forth, because I feel like that's where I've excelled, especially with the flip houses. So we'll see. We'll see.
Yeah, I don't know if you saw Jim's comment that he put in the chat. You'll only be as involved as you insist to be, and you should insist on being on every call.
Yep. I love it. Thank you for sharing that, Jim.
So I do have a question just to follow up what Jeff was asking. Now, I know you mentioned that you your first investor that started with you on the flipping side, you brought him on as an LP investor on this current deal, if I'm correct. I know he decided that flip wasn't for him. So how did you manage to sort of sell him on the fact that, hey, you can still work with me, but on the larger scale, which is multifamily? How did that conversation go about?
Okay, so the gentleman who we did our first flip with, he just totally got out of the game. So
Okay.
so that's not him. But so we did a flip with it was a smaller flip, and $150,000 home, and he's the one that again, 174,000 he put into it, and then got his 174 back plus 30 some thousand. So I went to him and I just said, look, it seems like you enjoy investing in real estate. And he said, I do. And I said, well, I've got something I'd like to share with you. And this sort of deviates from, the flipping of houses, but you might have interest in it. He's a risk taker. It's very interesting. He's a risk taker, but he also doesn't always like to show his cards. So I shared with him this 446 unit, and he calls me up. He's just like, wow. He goes, this is a fantastic deal. I love it. How can I be involved? And I said, well, so I explained, and I said $100,000 minimum investments for accredited investors only. And he's like, well, I'm accredited. And I said, well, I figured as such. And the next thing I know, he's thrown $250,000 at it. And I was like shocked. And I thought to myself, wow. I mean, I was only expecting 100, but all of a sudden he signs up, goes to my investor portal, $250,000. And I think that was, a lot of it was just through the trust that we built with this small flip house. And he loved how we worked. He loved the communication. We would call him and say, hey, we're ordering cabinets, I'm going to need you to pay for them and so forth. And he just liked how he just liked how I was, communicating with him. And so then, so after this particular one closed, and then he invested the 250, we went back to him with another project. And so he's the one that's doing this $150,000 shell and is going to basically, finance $400,000, the 150 plus then our 250 in rehab costs. And then we've come up with a sliding scale in terms of how he's going to, what sort of interest he's going to get paid back. So if the property, we have a choice actually of going with a lead certification or not. And if we go with lead certification, then the house will definitely sell for 650 plus. But if we don't, which it's a little bit more involved, then we have a sliding scale. If the house sells for 650 or below, or 600 or below, I'm sorry, he gets 15%. And then for every $10,000 more that it sells, he gets an additional percentage. And once we reach that 650,000, it's capped at 20%. So he doesn't get anything more than 20% back on his money, but he stands to make, if it goes over 650, he stands to make $100,000. And our goal is to have this house done and on the market by April. So I think it's just, it's really just that trust, just feeling somebody out, for their kind of their risk aversion, and also just really, again, finding out kind of where their hot buttons are. I knew that he had a couple of multifamily properties, so I think he was really intrigued by being able to, and he's the type of person too, I love him to death, but he also likes to brag. So to be able to brag, to say he's part of 446 units in Texas, I think that's a big deal for him. So, sometimes you have to figure out where they're, what makes them tick and just play to that. So.
Understood. Well said. I think we have a comment from Jim. I don't know if you want to unmute yourself, Jim, and feel free to go ahead, sir.
No, I had a few comments in the chat, but I wanted to ask, Beth, you seem to have a lot of irons in the fire, seem to be extremely busy. And I know a lot of people that are leading a W-2 life and are trying to build their business on the side while they're doing that, are struggling with time management and trying to figure out how to best spend their time. So with all the different pieces that you work on, could you give us a little flavor for what a normal day for you looks like, and where do you try to concentrate your efforts?
Sure. A normal day, 4 days out of the week, and I say 4 days is because 2 hours on those 4 days is spent in the gym powerlifting. So I train, and so fitting that in, it really can be a bit of a challenge, but normally my day starts, depending on the day, somewhere around 5 o'clock in the morning. There are 2 days a week that I actually get up at 4 o'clock in the morning because I still, I have a fitness background, so I still train a few ladies at 5 a.m. 2 days a week. But usually around 5 o'clock, I'll get up. We have 5 dogs, and the 5 dogs like to go outside. They like to eat, whatever the case may be. So I make my breakfast, and as I'm making my breakfast, I actually have a journal that I write in the morning and then before I go to bed. And in this particular journal, the journal is actually all set up for me, so it's kind of nice. But it does ask me to write down 3 things that I'm grateful for. It asks me to write down what my 12-month goals are. What are the hot buttons that I want to accomplish for the day, and then list any other miscellaneous things that I think that I hope to kind of get to over the course of the day. So I usually do that while I'm eating breakfast, feeding the dogs and so forth, and write that all out. Then I'll either go to the gym for 2 hours and train. And while I'm training, I use that time a lot of times to start communicating with people right from the get-go. The way my training is set up, I will do a set, and then I usually have to rest for anywhere from 2 to 3 minutes. So I use those 2 to 3 minutes to pop on Facebook, see what sort of things have been posted that I can respond to and so forth. If I see a post that I like, maybe it's somebody that's talking about they're looking to place money or whatever, I always save those posts, and so that way I can refer back to them. But I'll start shooting out messages, and if it's 6 o'clock in the morning and I'm shooting a message, I wake up to messages that are shot at me at 2 o'clock in the morning. So I'm like, well, I've just got to get the business done. So yeah, I'll start going through Facebook, looking at LinkedIn, seeing, checking on the news if there's anything important that I need to be aware of, and then scrolling through any emails and starting to answer people back if I miss something during the evening. And I sort of set myself up for the rest of the day. Like what are the important things that I wrote down, and how am I going to go about, making those happen? And then as soon as I get back to my home office, it's like, I tell people, I feel like it's the stock market. When the bell rings, I'm just like, go. And then, 4 o'clock rolls around, the stock market stops. But I mean, here we are at 7:58 on what night is it? Oh, it's Monday, on a Monday night, and I'm still going. And there's days where I'm just like jumping out of the bed, and there's days that I can't even sleep because I have so many thoughts. But really, I'm a list kind of gal, and I got that from my mom, and that will always be with me. And it's about making that list and crossing it off. What are the things that I need to do? Who are the people I need to, be in touch with and stay in touch? And I've got a whiteboard that sits behind me. It's not in this room. It's actually downstairs where my home office is. And I just have, kind of, okay, here are the hotel conversions I'm trying to make happen. Here are the deals I'm capital raising for. And then here are the ones that, my, deals that I'm trying to secure myself. And I try and allocate time to each of them every single day. And without, sometimes I'm allocating more to hotel conversion. Sometimes I'm allocating more to capital raising, but I try and just at least make sure I give, 2 hours to each of them on a daily basis. And so that way nothing is no stone is going unturned. And when the weekend rolls around, I'm not going to lie, Saturday afternoon around 4 o'clock, I shut it down. I need my time. I need to mentally recharge. And if it means I'm, watching, watching something brainless, whatever the case may be, I'll do that. Going out to dinner with my husband, spending time with my daughter, friends, whatever the case may be. But, and then usually right back Sunday morning, I put about a half a day in on Sundays, and that's to just comb through all the emails that I got for the previous week and say, okay, what's garbage? What did I hold on to that I'm really it's not gonna be relevant, and just kind of start to clean up things so that way I'm just set and ready to go for the rest of the week. I don't know if that helped you at all, but did that answer your question?
Yeah, that was great stuff. So what do you think is your most important skill in your skill set?
Oh boy. That's a really good question. At first I thought it was acquisitions, and I think it still is. I mean, I've been told that people call me the hustler. So I've pushed a couple of brokers, to, hey, find me deals. So I feel like acquisition has been good, but my boundaries, my limitations have really been stretched with the capital raising. Because again, like I've said previously, it's just forced me to get out, and I've always considered myself an introvert, and now I feel like I'm more extroverted than I've ever been. But honestly, organization. I really feel like I'm anybody you talk to, if they are like, well, Beth knows where a document is, or Beth knows where this is at. With any of our projects, all of our flips and so forth, everybody always came to me for, Beth knows the answer. So I feel like once I immerse myself in a project and I know it well enough, I mean, there's no stopping me with the knowledge and the memory. And of course, we got ourselves into, not got ourselves into, but had to file a lawsuit against one of our contractors. And the lawyers were always coming to me all the time. Beth knows the answer. Beth knows the answer. So I guess my organizational skills really is probably what I excel at.
And do you do most of or a lot of your work from your home office?
Yes, I do all of it from my home office.
So
yeah.
I will, I relate to what you say about being an introvert. I have been a lifelong introvert, but I think you and I also have another similarity, which is no one believes us, because I will challenge you and say that I think your number one skill is communication.
Oh,
and I think that, being able to, trying to draw a mental picture, being a chess master and moving the pieces and keeping things organized and planning ahead, I think is the impression that I get from how you're able to juggle so much and being able to use, I think the highest and best use in this business and most businesses is communication. And I think that most of us struggle with it. I think that especially if you don't come from the right background, many of us want to do too much instead of communicating and allowing other people to do what they're capable of. And it seems like you're doing an outstanding job of that.
Well, thank you. I appreciate that. I do like communicating. I'm not going to lie. I don't know why I've grown to love it, but one thing back, I mean, I was valedictorian of my high school class, so I had to get, hop in front of everybody and give a speech. And the principal came up to me afterwards and he said, I hope you're going to go into public speaking. And I looked at him and I said, I never thought about that. But I have found myself on numerous occasions in front of people speaking. I went through a cancer journey, so I've spoken to a lot of people about cancer and battling it. I battled an eating disorder for 26 years, so I go to colleges and high schools and talk to people all the time about mental health and so forth. So I guess maybe communication is my strength, and I just need to recognize that a little bit more. So.
No, that is truly awesome. I would say you're more ambiverted. I actually learned that I was the same way because I too am very, I dub myself highly introverted. I never like to speak to people. And I would say prior to this year, we would not be having this conversation on a meetup. But I've learned that, once you start talking and you're comfortable, I think it's just, it's smooth sailing from there. So I would say we're all of us introverts are very ambiverted, where we don't talk to begin with, but once we start connecting and the conversation flows our way, we're interested in the conversation, then it's pretty much just smooth sailing from there. Now, I do have a question for you though. What tips or advice would you have for someone who is looking to start their journey in real estate, or who's an aspiring rehabber or multifamily investor? What tips or insight would you have for them?
I think it's really important to just seek out a mentor, just somebody that can really guide you. We paid for our guidance, and I'll be honest with you. I mean, the company that we did the flipping workshop with and so forth, I mean, they're belly up now. They have such a bad reputation. It's horrible. It's so unfortunate to see all that happen. But if I could go back in time, I would have, there's so many people out there, so much information. I would say, you know what, do yourself a favor. Don't spend the money. Instead, maybe hop on some podcasts, buy a couple of books, and then seek out somebody who's willing to just maybe spend an hour with you a week, at no cost to them, just because they want to be able to help, and just really just find somebody that's going to guide you. Because I think, you want to find somebody who's going to, maybe keep you accountable, help you to stay motivated. I think this business, even with the flipping, I mean, I'm on a freaking roller coaster ride. I don't know about anybody else, but I have the highs and the lows, and sometimes they happen within a half hour of one another, whatever the case may be. But yeah, making sure you're staying in the game. I think too easily people get into this. I can't even tell you how many people I watch pay thousands and thousands of dollars, attend the 5-day event at the workshop in Irvine, and never to do anything with it at all because they were too scared. And it's amazing how much fear actually holds people back from moving forward in real estate, just in general, whether it be flipping, multifamily, whatever the case may be. But I think that's why you need to find a mentor and find a community of people. And when you start seeing other people do things, or when you have, that person that can help you stay accountable, I think that's really important. But I think reading up on it too, I mean, start with that. Just, learn what you're getting yourself into before, just jumping in with both feet. Because sometimes I think people jump in with both feet and they don't really realize what they've gotten themselves into, and then it's a little too late.
Awesome. Jeff, go right ahead, sir.
Thanks, Mark. So Beth, earlier on, you mentioned that you do a lot of fundraising and you use a portal. Can you talk about what your journey was like when you were evaluating different solutions, and what portal product do you use today for your fundraising?
Oh, the only one that I'm honestly familiar with is Syndication Pro. So that is the one that several of the deals that with the capital raising, that's what they've used. So I've become familiar with it now. Obviously, since then, I've been reached out to through LinkedIn by people that have other particular portals and such, but the only one that I'm currently familiar with is Syndication Pro. So,
okay.
So I can't honestly answer that.
Okay. And then the next question that I have for you is, it seems that right now you have pretty substantial deal flow. So have you considered developing some kind of investment fund where, as you're kind of finishing projects or attracting investors, you could use a fund rather than raising on a deal by deal basis?
I would love to do that. I just don't know enough about it. So if that's something that you're more familiar with, I'd love to have a separate conversation with you on that. But I honestly don't know enough about creating a fund and what that would look like. But it would be nice.
I will say that on the Wednesday GOB member-only calls for capital raising, we're going to have a lot of people that have experience in funds over the next several months. So if anyone's interested in learning more about them, I would encourage you to be there.
It's good to know. Thank you.
Now, do you, when you're raising capital, do you get the underwriting from the operator to see if the numbers work and if it's worth raising for, or are you just pretty much taking them at their word and raising the funds for those deals?
You know what? They'll send me all of their information, everything ahead of time, and I'll take a look at it all. And then we usually have a conversation or Zoom call, go over questions that I have and whatnot. A lot of times, though, depending on the dollar amount, like for instance, there's a deal right now. Somebody has $2 million to place, and there's a deal that actually needs $2 million. So I find myself being more of a connector in situations like that, where I just get everybody on the phone together. And I'd rather that the individual that has the $2 million, they're actually talking directly with, one of the GPs who sourced the deal and did all the underwriting and so forth. And that way, I'm not saying, you know what, I'm not sure about that answer. Let me go back and find that out. I'd rather have them just talking to each other. And that way it's just, all questions get answered. And, but it's great for me because I get to listen and then I'm able to find out even that much more about the deal. And the next time, maybe if a situation arises where there's a question that comes up that might be similar to something that I heard, at least I know better how to answer it. So that's typically what I will do.
Awesome. So I know we're pretty much a little over the hour, the top of the hour here, and we probably would be here for another few hours answering questions and hearing your story, Beth. But we will end on this note. If anyone else, does anyone else have any questions before we close this amazing chat and this amazing meetup here? All right, so since no one has any questions on this note, I want to thank Beth for jumping on with us and sharing your amazing story and educating us on how you've started your from flipping and to now being an aspiring capital raiser, as well as an aspiring multifamily operator. We definitely look forward to hear more from you, and I definitely will follow the journey. And again, the platform is always open to you whenever you want to come back and, share something with us and educate us. And before we end, I do want to do a shameless plug for those who are, I know Beth alluded to my last question that you should definitely find a mentor. You don't want to waste your money paying for these high price tagged coaching programs out there, but we do have an amazing program called the GOB Network. We have the founder, Mr. Jim Biggs, on. So I don't know, Jim, if you want to do the shameless plug for the GOB.
Shameless plug, just for the sake of brevity is go to the gobnetwork.com, take a look at it. I would encourage you, if you're thinking about getting some mentoring, the best mentors I've had in my life are the ones that I didn't pay for. And if you've got 30 or 50 grand to invest, I will guarantee you that investing it in a deal will teach you more than you'll ever learn from anyone, including the GOB network. And the reason I know is that I've been paying for those for the last 40 years. And I've invested in deals, and you always learn more from your deal. It'll give you the kind of encouragement you can't get from a person, which is a mailbox money. And it'll also make sure that if you're not doing the right thing, every month you're going to feel the pain until you fix what you're doing wrong. So invest in deals, and your education you can get. It's all available. What we're doing is not rocket science. It is new. Most people can find it if they want it without pay. We're just trying to put it all in one spot and make it available for you. And we are bringing all of those resources into one organization and making it available. All we ask is that you be a go-giver and that you participate. And that's the only cost to be a member. It is member only, so you do need to connect with somebody to bring you on board, like Mark. He's one of our proud affiliates, and Mark would be happy to sponsor you into the program. Thank you, Mark.
Thank you, Jim. And also, we do have a few other GOB. We have Beth, who recently joined the GOB network as well. So feel free to reach out to her, and she will be glad to sponsor you. And feel free to connect with her as well. And don't forget, everyone, to please drop your information where we can connect with you in the chat so we can stay connected. And with that, I bid everyone adieu.